So first of all, the banking sector is a very strong indicator of the economy, and there are different themes that we need to watch for. So first is really activity, right? Are companies, are businesses, consumer borrowing more or investing? Like, are they like borrowing money or are they saving money, right? So looking at, for example, the consumer spending patterns. Are people saving because they're scared that the economy will turn back? Or like, are they expanding and are they getting more loans? Are they buying properties? Are they expanding? Then one thing we also want to look is, again, what are corporates doing? Are the M&A activity or corporate actions, corporate banking activities increasing? So all these big banks are making a lot of profits from mergers and acquisitions, corporate banking. So looking at this pattern is very important to understand how the economy is growing. Are companies like going IPOs? Are companies like doing M&A activity, or are they stopping that because they're scared about the economy? The wealth management side. So how are the fees coming from managing the wealth of consumers, right? Are they expanding or are they increasing? And then also the interest from the interest incomes. So based on the interest rate change, how are the net income from that interest coming in, and are they higher or lower? And then obviously it's really what's happening with the economy, right? So the outlook with the economy. So like if we look at the research and if we look at the outcome from the analyst, banks will tend to have good balance sheets with stable margins. We have seen an increase in deposit, especially with Bank of America and JP Morgan from the recent regional banking crisis. But it's all tied down to the economy, right? So we had some important results this morning, and then it's all about really how the economy is going to perform. So is the Fed going to raise rates? Is the Fed going to reduce rates? That's very, very important for the banking sector. If we look at defaults, the largest bank are going to be in a good spot, but there's going to be more wariness for the smaller one, like we've seen in the regional crisis a few months ago or last year. Smaller banks tend to struggle in these uncertain times. So again, the upside is really linked to the economic cycle. If we read like some analyst report, if we look at JP Morgan in particular, they're expecting, so the analysts are expecting a really strong volume coming from equity trading, but there's been a struggle in the FICC sector, which is fixed income, currencies and commodities. So those like commissions they tend to go down this year compared to the equity volume, and really looking at the fees and the volume from that sector. So tomorrow we'll see the first one, but today what we're going to do is we're going to look at some data on how you can look at those stocks and prepare for the outcome ahead of earnings.